And there it is, the closing bell at the New York Stock Exchange. There you see the Tunnel to Towers Foundation on this Friday before 9/11. The CEO, Frank Siller, there ringing the closing bell. It was a strong end of the week for the U.S. stock market. The Dow Jones closed up around 377 points.
The S&P and NASDAQ also finishing the week in positive territory. The S&P climbed about 1.5%. The NASDAQ there climbing about 2%. Joining us now is Robert C. Hockett. He is an Edward Cornell Professor of Law at Cornell University, where he teaches financial and monetary law subjects. Robert, thank you very much for joining us.
Hey, guys, great to be with you.
I want to get to this first. Federal Reserve Chair Jerome Powell recently hinted another interest rate hike is on the horizon. He said on Thursday that inflation can be controlled without imposing, quote, very high social costs on Americans. Do you agree?
I think it's true that we can crush inflation without imposing high social costs, but I don't think that one of the ways of doing that is raising rates continually to the point where we try to raise the unemployment rate, as some people are advocating.
Well, the expected 75 basis point increase would bring the federal funds rate above 3%. So how significant would that be?
That's potentially quite significant. It really depends on how much or what magnitude of sort of countervailing action might be taken on the other side of the economy, the fiscal policy side. We seem to have kind of forgotten about the idea of production in our country over the last 30 or 40 years as we spent decades outsourcing our productive capacities. And in forgetting production, we've forgotten the other side of the equation that's sort of implicit in the old adage that inflation is too much money chasing too few goods. If we recall that we can actually improve our production of the goods on that goods side of the equation and actually boost our supplies, we can actually prevent or eliminate inflation in a manner that doesn't require throwing people out of work, as continually raising or hiking up interest rates is likely to do.
And Robert, I want to turn now to unemployment, because on Thursday, first time unemployment claims, they fell to a 3-month low. So how important is the strength of the labor market right now to upholding this economy and also fighting those recession fears, especially amid the high inflation that we're seeing?
I think it's critically important to heading off or preventing the inflation. And we don't, I don't think, want to crush the sort of strong labor market that we've been enjoying for the last year or so. If you think about it, if you took Larry Summers' advice, which was to the effect that we ought to be pushing for, something like a 7 or 8% unemployment rate, or even a 10% unemployment rate for a couple of years, or a 6.5% unemployment rate for 5 years in order to crush employment, seems like we ought to be asking a few things there, right? The first is, how many or which particular people who are currently working after having had a hard time before the pandemic came to an end, which of those people do you want to go up to and say, sorry, we're going to have to throw you out of work now because we've got an inflation problem? Secondly, because the black unemployment rate tends to be about double the ordinary or the sort of unmodified unemployment rate, we're really talking about, Larry Summers and his followers are talking about a 20% black unemployment rate for a couple of years, or a 13 or 14% black unemployment rate for a bit longer than that to crush inflation if all we're going to be doing is looking at the labor side. What's sort of curious about those kinds of observations and recommendations to me is they ignore another component, of course, of price, right? Price is composed not merely of labor costs, but also of profit margins. And as we know, profit margins across the economy have been at record highs across the board. And it's puzzling to me that when inflation is supposedly a problem, that people like Larry Summers, Jason Furman, and others are sort of looking at those profit rates and maybe treating them as the culprit rather than the fact that some people who didn't previously have work now finally actually do have remunerative employment.
You're raising a lot of questions that really go to the heart of a debate that is ongoing. Robert Hockett. Robert, thank you very much for sharing your insights with us.
Thanks so much.